NYC Apartment Zone, NYCApartmentZone.com. From New York City, this is the NYC Zone Teams Podcast, a show where we discuss everything about New York City real estate and much more. You have questions, we have answers. And now, here are your hosts, John and Nikolai.
Here we are with another episode with the NYC Zone Team. We are here with the famous Ami Rosen from Wells Fargo. Thank you so much for passing by. And of course, we have Nikolai, co-founder of the NYC Zone Team.
Hi guys.
What up, what up? Just so everyone knows, we're on camera right now. We're not live, but hey, we're all here. So people can see this on all our YouTube channels, Facebook video channels, and if they want to see it on, hear it on audio, we're on literally iTunes everywhere around the world. So, Ami, so great for you to be here. We're going to be talking about the most asked about question about when buying real estate is getting a mortgage, right?
Sure.
So I think that one of the things that a lot of people ask us, especially for first-time home buyers in New York City, they kind of like want to know the process, because one of the first steps that we always tell our clients is, okay, are you pre-approved? The next question is, what is that? So explain to us, the process of a buyer when they do the pre-approval. We were just talking a little bit earlier about the commitment letter and stuff like that.
Yep.
Explain a little bit about the process.
And what is pre-approval to begin
Yes.
with? Sure. So first off, thanks for having me, guys. It's good to be here in Compass, the fastest growing real estate company in the world. So
Correct.
It's exciting. There's a lot of buzz outside in the hallways, and it's always a pleasure to see you guys. So mortgage, right? It's always the big, white elephant in the room, because it is a difference between what a buyer has in terms of money in their hand versus the purchase price, and someone needs to bridge the gap, and that's usually a bank, and that's a mortgage, and that's where I come in. So a little bit about me: I've been doing this for about 19 years. I've been in the top 1% in mortgage originations nationwide for the last 10. I know my way around a mortgage. It's what I do. I love it. And the most exciting part for me is the beginning, right? It's obviously at the end, the closing, that's where everyone's happy and everyone's shaking hands, but the beginning is the most exciting process, and that's the most time I get to spend with the client, and that's the upfront initial vetting process. So from my perspective, I will be referred a client, whether it's from a past customer, a broker, an attorney, a CPA, a financial advisor, whoever it is, and we'll have an initial phone conversation. And that phone conversation will get to know each other, right? Mm-hmm. So me getting to know them a lot more than them getting to know me. But I learn about how much money they make, what they do for a living, how long they've been doing it, how big is their family, how much money they have in the bank, how do they pay their bills, their whole life. I know more about them than their own spouse does in most cases. So
is it a good or a bad thing?
a little bit of both. But so I speak to them up front, and I vet them as much as possible. So any good broker in New York City or anywhere in this country will not take a client out or submit an offer without a pre-approval on the property, right? Or pre-approval from a bank, from a reputable bank. So what we do is we check, I like to call them the 4 legs of the table. That's your income, your assets, your credit, and then the collateral. In New York City, it's very important because whether it's a co-op, condo, we'll look into that. But in the pre-approval side, really, income, assets, credit, we will check everything, make sure all the T's are crossed, I's are dotted, and if our system likes it, we will issue a pre-approval. I can go further into it, but that's kind of the broad overview of what we do in that initial conversation to pre-approve.
Okay, great. So I think I have one of the main questions is, when I speak with you and when I'm looking for a pre-approval over the phone and everything, do I need to give you any sort of paperwork, or is it just going to be based off what I tell you? Let's say I say my income is $500,000 and all that good stuff.
So the good old honor system,
yes.
Right?
That doesn't work?
So there's really 3 ways you could approach an initial, pre-qualification process. The initial process. There's 3 ways you could approach it. There's a pre-qualification, which is basically what you're saying. It's, hey, I make $500,000 a year. I have $1 million in the bank. You can run my credit, which is the only thing we do for a pre-qualification, and boom, you get a pre-qualification. But that's not really, most listing agents won't take it. They want pre-approval, or what we call a priority buyer pre-approval letter, and that's with vetting income and assets, to take a look at documentation. Now, it doesn't have to be as in-depth as when you actually go into contract and go up to our underwriting, but we want to see at least that what you're saying is what you're making. It's especially important with self-employed borrowers who are 1099 or K1 or Schedule C income. They may think they make $1 million, but after write-offs and everything, their tax returns might show they make negative $400,000. So that's really why we have to look, and it's important to look. And it's important to the people who refer me to the business that I vet the customers properly. Because if I don't, then I'm not getting any more referrals from those people. I look like a schmuck, and I don't want to do that. I'm not in the business of looking like an idiot. So pre-approval, to your point, Nick, is we will vet the customer with documentation. Now, the next step, which we've touched on, is you could actually get a pre-approval commitment letter, right? So that's a commitment letter that's reviewed by our underwriting team. That's a full submission of all documents. That's ironclad. That's legally binding. Subject to a few things such as appraisal and building approval and whatever else the underwriter might deem. But you can go into a deal with if you're serious about buying and you're at the time, you can go into a deal with an ironclad, legally binding commitment letter, where you have all the power in the world now to negotiate with the seller, with the listing agent. You're not worried maybe about a mortgage contingency in the contract. That's the third next step for the real serious buyer, and the real shrewd real estate agent will want that full vetting via commitment letter.
Right. So, question about the commitment letter, because I we've come across this before with co-op boards and with the management company and everything. And sometimes what happens is we get a commitment letter, and then we have the ASTIC forms, and they have like 2 different numbers and stuff like that, and it's just a nightmare. But when you're submitting offers on a unit, and let's say you have a commitment letter for $500,000, but you're going to get the place for $475,000. How does that work with the bank to get that changed? Is that an easy fix, or?
Right. So I would say from the offer standpoint, I would not necessarily offer with the commitment letter pre-approval. I would offer with the actual pre-approval, because you'll have both. Right. You offer with the pre-approval, it says a number. Even if you offered with the commitment letter pre-approval, just to make your offer stronger. It's a matter of what's always easier to go down in loan amount than up, because up we have to re-underwrite. Down is easy because if you can afford $500,000, then you can afford $475,000. So we can take it down. It's a matter of a few clicks of a button, and it's change the purchase price and issue a new commitment letter.
It's done.
Yeah, it's a simple process, same day.
And I think that's actually important to know that when we're representing a buyer, everybody has to be on the same team. The mortgage broker should be able to reach the real estate broker for any information. The real estate broker, vice versa, should be able to reach the mortgage broker to do any of those adjustments. Because in my eyes, when we submit an offer, let's say the pre-approval is up to $500,000, and the offer is $450,000. When the seller is going to see it, he's going to know that there is more room for the person to come up. And if instead I can give you a call, you can change it with a few clicks of a button 100%. And have it at $450,000. I think that's the better route to go.
100%. I mean, I'm doing this 19 years. I've had times where during a day, brokers called me, can you get me one at $485, one at $475, and one at $465? So, I'm like, no problem.
Do you have all of them in the same email?
So, from that perspective, happy to do it, and easy to make the change.
Okay. What is your experience with the current buyers that you're seeing right now? Are you seeing a lot of buyers with student debt? Because a lot of millennials are now going into the field of buying right now. And some of them are kind of being restricted because of their student debt. They're paying the amount per month almost the same price of a mortgage of getting a home. So what are you seeing in regards to that?
So student debt is slowly becoming like this country's big epidemic, I think, especially because it's not like it used to be, and this is my own personal opinion, obviously, and I should say everything here is my own personal opinion and not the reflection of Wells Fargo. So, but student debt, used to be you went to college, you had the college degree, you had the college diploma, okay, it's on your resume, you're good, you'll get it, you should get a job, that's kind of how it worked. Now, it's really more about the hustle, right? So it's people who are willing to hustle and who maybe did a year or two of college, or maybe didn't even go to college. Gary Vee is a perfect example. Somebody who just, he's almost against education. I don't want to put words in his mouth, but he's like, should be saddled with student debt, and that's an issue. So one way to do it is make more money, so you don't have to cover the student debt. But another thing I'm seeing with millennials is just the actual commitment of buying something, right? So, I'm on that. They say millennials 1981. I was born in 77.
Mm-hmm.
I kind of think I kind of like to call myself like an
Millennial.
OG millennial. I don't know. But it's about committing to something, and I'm seeing less commitment by this generation. I think in buying a place long term. Maybe they'll buy it a couple of years for a short term investment, but like taking a 30-year fixed mortgage on like a condo in the city or even a single family house, I just don't see it, so it's less commitment. It's more, I would think, and maybe you guys could tell me, it would be more on the rental side. These people just want to take maybe longer rental leases instead of buying, but that's the other thing I'm seeing.
I mean, from our eyes, we're seeing just people. I feel like they have so many expenses, including the student debt, and they're not sure. It's like, well, if we take another fixed expense into our monthly, it's like how are we gonna make it work? Which is actually an interesting question. We have a separate podcast that goes over benefits of owning instead of renting. So, especially if you're an independent contractor, you might be winning buying instead of renting because you. In the end of the day, on your tax returns, you might be able to take certain advantages.
Yeah, I mean, listen, there's obvious advantages of owning versus renting, and that's building equity. That's mortgage interest write-off, which is less than it used to be, but there's still a significant tax savings. But there are costs involved with having your own place, and it's
pros and cons.
Yeah, there are definite pros and cons, and obviously, market.
Right.
You're catching it at the right time, and even though you're not selling right away, if you buy and then 2 years later the market dips, you're freaking out. Even though it doesn't affect you whatsoever, your monthly payment's the same, your taxes are the same, your maintenance is the same. It's just you can't sleep at night because your investment is
underwater.
Exactly. So but as long as people can see that the trends are always up and down, and after every 10-year period, they're usually up, similar to the stock market. Just stay the course and do your
You should
thing.
be fine.
Yes.
Be good to go.
And the good thing about Manhattan and New York City overall, the dips are not as bad as the rest of the nation, for the most part, from experience.
Yeah, we're seeing some appreciation. And that's the thing, like with buying, there's a lot of appreciation, especially in the areas where there's a lot of development and everything. Manhattan seems to be pretty strong. Of course, we've been seeing a dip into the market, but as of right now, we're seeing some high activity.
Yeah, sure.
What kind of activity are you seeing right now in mortgages?
Yeah, so I mean, I would say the last half of 2018 was kind of like, it was eerie. It was slow. It was, the phone wasn't ringing as much, and I don't think people were buying. I think people were waiting to see, what's Trump gonna do, or what's gonna happen here, or the Russia investigation. Who knows? Everybody was just making. But I think January, February, I've seen a lot of activity. Does that? It also corresponds with rates coming down a bit, right? So rates are back down. People feel like maybe they're catching it at the right time with rates and prices, where prices have dipped a little bit, rates have dipped a little bit. Maybe this is the time to buy, because if you know anything about mortgages, you know that if you're financing 80% of your purchase and you're going to pay interest on the money you're borrowing, a 0.5% in rate on $1 million loan could save you $100,000. I mean, it could save you a lot of money. So even if you're paying more for the real estate, you're paying less for the mortgage, you have to time that correctly. So if you're an all-cash buyer, it's obviously a different play. But from a mortgage perspective, when rates are low and we're heading to the spring market, we should see some activity over the next couple months, I would think, into June, July. That would be my guess.
We're seeing a lot of activity on our end, where we thought people were just really just skeptical about buying, kind of like what you were saying earlier last year. But this year we're seeing some an uptick. And I think it's literally just people just trying to take advantage of the rate right now, because who knows, it might go back up. And actually, with the activity that's going on, it looks like it's going to go back up. Do you feel like the Federal Reserve is going to drop rates or increase them this year?
Well, again, I have no crystal ball, but they raised them a bunch last year. Fed raised rates. They held steady in the most recent meeting. I would think they would continue to raise them as a sign of strength. But all you need is one disaster and rates will come flying down. We had it, 2007, 2008. over the years, there have been periods of time where, you know, you have stock market snafus and,
Right.
you know, and rates just drop. So one singular event could change that, but I think you're going to see a steady uptick in rates. And right now, you got to really strike while it's hot because, again, real estate dipped a little bit, tiny bit, not a tremendous amount, but anybody who listed their property in the last 6 months felt it because maybe it wasn't moving, and rates are back down, you know, 30-year fixed under 4% with the right credit, and, you know, rates back in the 2s on some arms with, you know, special pricing benefits. So, I mean, that's a time to buy when you can borrow the money cheap, in my opinion.
Okay. So, what we're seeing a lot too is down payments from parents. Are you getting this a lot? Like,
A ton, yes.
a ton. And have you seen like an uptick on this? Like a lot of parents that are getting involved?
I mean, not to pick on the millennials, but it goes back to,
Right.
you know, I don't know where I read it. I read it a couple of years ago that like for the first time ever, a generation was polled, like they do different pollings on different generations, and a group of individuals in the millennial sector was polled, and it was the first time you had a segment or a generation where money wasn't the most important thing on their mind, right? So making money, and like, which has been forever. I mean, you know, go back, you know, read the history books, everything's always about money, but for millennials it's about comfort and relaxing and being and not being bothered, right? And these kind of things, whereas, you know, money does afford a lot of those things, but making the money does not, right? Because you have to hustle and get dirty, and not, you know, in a good way dirty, but, you know, you have to work, you have to need the bread. So to that point, down payments have to come from somewhere. If you don't have money, but you want to buy a place, and you're accustomed to, you know, nice things because you grew up in, you know, a nice family, maybe your family has money, and all of a sudden you want to buy this place. Oh, I need a down payment. Oh, I need to be pre-approved for a mortgage. I need you know, most of the times I'll get what's called non-occupant co-borrowers, which are parents signing on the mortgage note for their kid, with their kid, as well as providing the down payment. So to answer your question, I'm seeing a lot of that with this generation.
Right. And we figured, because we do have some clients where parents to come in and they're gifting the money, or they're going to be a guarantor to purchase the place and whatnot. But it's really tricky because in New York City, not every building will allow that. You know? So there's some buildings that the ones that don't allow it, the prices are attractive, but it's harder to get in because you need to have your own money.
Just to specify, it's mainly co-ops.
Right.
Well, not all of them by far, but there are some of the prestigious buildings that just don't allow co-purchasing, they don't allow co-signing, you just have to do it on your own.
Do it on your own.
And that's their right.
Right, and it's their right, and the price reflects on that. You know, and then they're like, oh, this apartment looks good, and you look at it like, you won't get approved for this building because of X, Y, and Z.
Correct.
So,
but I think overall it's very smart from the parents' standpoint. You know, if they have children who are in their 20s or 30s, to help them out with the down payment, because if their children are already paying $2,000, $3,000, $4,000 for rent payment, why not provide them the money if you have it, so they can put the same money into an equity?
Yeah, listen, every parent is different, but you know, my parents, I didn't come from any money really, but my parents would always make me go out there and earn, you know, working waiter jobs, you know, you want it, go get it.
Right.
Other parents say, okay, honey, you want to live in Manhattan? Nice place. Here's $400,000. That's also nice.
Right,
you know?
sure. Why not?
Yeah, God bless them.
Right.
So every person is different in what they want to do. Some parents are go out and make it on your own, and some parents are like, I support you 100%, honey dear, honey booby, I love you, baby.
Perfect. So just to kind of go a little bit along the process. So when someone gets pre-approved, right? They get it pre-approved. They work with us, and then we submit an offer. An offer gets accepted because we have to submit a pre-approval with their offer. Once it gets accepted and everything, then a contract gets sent out to them, and it gets signed. Once it's signed, what's the next step for the bank to come in?
So a lot of times people who do what I do will wait for a signed contract to start working on it.
Right.
Once I hear accepted offer, I'm already on it. Guys, here's what we need. You know, I have myself or my team member send out an email with a complete needs list. Here's what I need from A to Z, and whether that's, bank statements, IDs, tax returns, pay stubs, letters of explanation on certain things we saw in the credit report, whatever it is, we send a comprehensive initial needs list, okay? Inevitably, it's going to open up questions about other things. We're going to see something on the statement that we have a question about or an underwriter has a question about. We'll have to ask. But hopefully we're doing this due diligence before the contract's even fully executed.
Right.
So that's the hope. But even when the contract is executed, we can order the appraisal, okay? Appraisal is a pivotal piece in the process, as you know. Basically, for the listeners, an appraisal is a third-party company that goes out to the property and will appraise and determine a value to the property that the bank will use, and they'll do it via two things: comparable sales in the last 6 months and properties within a half a mile.
Okay.
So those are the characteristics. They'll use comparable sales that have closed, and they'll create a value for the property. Okay, this is how it's used. So if you're at a property that's higher per square foot than the average sales in the area, and you don't have any other comparable sales, your appraisal may come in low. So realtors usually know if that's going to happen. They always say the appraisal might come in low here, and I don't know. Let's what can we do? But appraisal comes in. We vet the building in New York City. We have to go to, if we don't already have it approved, we have to go to the management company, get documentations, a condo or co-op questionnaire. We have to look at the building, whether they're heavily investor owned, whether they have a heavy concentration of commercial space, sponsor owned units. There's a lot of things we look at in the buildings. At that point, once we approve the building, appraisal, have the commitment letter, we're pretty much done. We're waiting on, we're kind of waiting on the closing date. And my hope as a mortgage banker is always to be waiting for someone else and not someone waiting for me. That's the worst feeling when we have a really tough deal, and I'm getting calls and pressure from everywhere. We got a contingency, we got to close it. That's really hard. Sometimes deals are tough and they take longer and more pushing and massaging, but we try to do our best.
And how long does it take, more or less, from the contract is executed to get an appraiser to the door? How many days or weeks does it take for someone?
Contract executed. So, contract executed. We input the application in the system. The address in the system within our application, and then the customer has to, for compliance purposes, tell us he's ready to proceed. Right? You can do that in a number of ways throughout, internally in our loan system, whatever it is. He gives us intent to be compliant. So once intent is given, we'll collect an upfront appraisal fee, which is the only fee we collect upfront, and then we can order the appraisal. So depending on how long it takes the client from fully executed contract to do the intent to proceed and pay the fees, we can order the appraisal. The appraiser, usually the SLA, service level agreement, is 48 hours for them to reach out to the broker once they pick up the order. So they could be at the door. Usually usually always within a week of the executed contract, the appraiser is there.
And you said it's an upfront fee. More or less, where does this range in the fee for the appraiser?
Well, so it's a lot is dependent on value of the property type. If it's an investment property, there's different, kind of market rent sections that have to go into it. So it can vary. It could be, as little as $300-400 to, a couple $1,000.
$1,000. Okay, so it really varies, but it's an upfront fee in order to bring an appraiser out.
Correct. It's the only upfront fee we have.
So there's no upfront fees with the pre-approval or anything like that,
correct?
All right, so that's the only fee.
That's my investment of time, and to hopefully, have an opportunity to do the business once they get the offer.
Beautiful.
But inevitably, it's, as you know, it's a shopping game.
It is. So once that's done, appraiser is done, they send out the information to you guys, right? You guys read it. What's the next step from that?
So the appraisal is done, building approval is done, hopefully. Commitment letter might have a few conditions that we've just X'd off via the appraisal and the building approval. Might have some other conditions. If there was a gift, we might need a gift letter. Maybe some verification of the rent they paid to their landlord. Those are kind of conditions that are post-approval, but still at the end. But not much. Commitments these days, it's changed over the years, since I'm doing this. It used to be we would just issue a commitment and leave 30 conditions on it, right? Everything, and that was kind of stupid, because, for lack of a better term, because what are you approving? You didn't approve anything. You didn't see any of the docs. You're asking for all these conditions. So that kind of changed, and attorneys got a lot smarter also. They started asking for what's called clean commitments. They don't want to submit anything to the seller or to the board that has any real, possible risk in terms of the conditions. So, I mean, once we get the commitment letter, it's pretty clean. We're pretty much done. Maybe wait for insurance on a condo or a single 1 to 4 family. But we're done. We're ready to set up the closing. The only thing that it's important to know is that to get the closing date as soon as possible, because we have to give customer 3 days prior to closing to sign and attest to the closing disclosure, what's known as the CD. And that's the final costs with everything. That even has broker's commission, that has every number correct. I mean, they have to see everything 3 days before closing. And that's also a change in the industry. That's a compliance thing for no bait and switch at closing or anything like that. So the closing disclosure, so the sooner we know the closing date, we can get the closing disclosure out and done. I had a closing, what's today? Wednesday. So I had a closing on Monday that, it was a condo, but we got it cleared to close in like 13 days. We had the CD out like 7 or 8 days before. It was like so smooth,
How often does that happen?
What? With a good borrower who's really, good with their docs and that people want to close fast. I mean, we probably closed that deal in like 25, 26 days in New York City condo. I mean, it was great. The clients were great. I went to the closing. I came in, on my high horse because I was and the rate was great. So I came in like it was up, and you love when that happens because you take the heat sometimes, but you love to ride the white horse and own the glory.
So what happens at the great closing? What does the bank play there?
We send in New York. We send a bank attorney, an attorney who represents the bank, to the closing. They work the docs with the title company. The buyers, sellers, attorneys are there also. The brokers are there as well in case they're needed for anything, and also maybe they pick up their check.
You'd be surprised.
Yeah.
Sometimes when there's drama between both sides and we have to mediate it, like we've always done from the beginning of the negotiations. Like it's quite interesting. Interesting. If they want a credit or they don't want a credit.
A lot of bankers don't show up to the closing, right? And for a long time, admittedly, I didn't because I got when you're very busy and you're doing a lot of work and you have a lot of closings going on, you start to you start to stop doing the little things, right? So I had this dip, like I mentioned, the last 6 months of 2018, and it was just like. It was kind of a wake-up call because I've been cruising for years and years, and all of a sudden I'm like, what? It's really you start to open up, your eyes open. You're like, what am I doing? So, so I started. I'm like, okay, I gotta go back. Let me rewind this thing 10, 15 years. What do I gotta do? What are some activities that I can do to ramp it up?
Sure.
And so I started going to closings again. I'm like, why am I not doing that? There's so many people there to meet.
Sure, of course.
It's like, why am I not doing that? It takes in New York City, even the furthest corner of this island will take you like a half hour to get to via subway, right? In Manhattan. Right. And Brooklyn, so you get to Brooklyn, whatever it is. Same with Long Island City, it's a hop, skip, and a jump. So just show up at the closing. It was so stupid of me not to, and I just see it, so I'm doing a lot more activity that I wasn't doing for so long, and it's it's bearing fruit.
It's a people business. From each side, from every single corner and everything.
Yeah.
So one of the things I did want to point out was I know you mentioned the commitment letter.
Yeah.
And I know with co-ops you're going to need something else as well.
Yes.
With condos, it's just a commitment letter and you're done. Is that correct?
Correct.
And with a co-op, what else do you need?
So you need to submit a board package, as you know, and usually the broker handles this, unless there is no broker. But that's, I think, suicide with dealing with the co-op, right? I know when I do refinances in co-ops, the customer himself has to fill out a board package to get it approved, and I'm like, oh my god, I can't believe, that alone is good enough to represent a buyer. So to submit a board package, you have to have the recognition agreements, the appraisal, and the commitment letter. Those are the three things that we have to handle to get to the brokers who are submitting the board package. And the recognition agreements basically stating your amount of shares in this corporation, because co-op is not real property. It's shares in a corporation, in a cooperative. So you're just basically seeing the attestation as to how many shares you're getting. It's signed by the management company, by a member of our bank. So those are the three things with co-op. It's a little little different.
Right. So just so that everyone's that's listening, it's also called an Aztec form.
Correct.
Right? So it's something that is needed when you're putting them into the board package. You need to get those, and they're normally the three original.
Yeah.
I always wondered why. Well, why? Can you
Because there
explain
are
why
three people who sign it.
There's three people who sign it.
Yes. So,
do you know who those people are? Like.
Yes, the management company, a representative from the bank, and the actual borrower.
Oh,
so
nice. Okay.
That's why
I've always wondered.
We've had the story when Aztec forms got lost the last day, so we had to resign them.
Yeah,
that's like literally the last day.
Yeah, the last day. I think it was closing day.
Yep.
Like so, then the bank guys, it was amazing how they even gave that turnaround. To be honest with you. So.
But I think one of the big questions is we kind of went through the process for different things. But if somebody is listening and they're like, well, we're looking to buy a property maybe within a couple of months, maybe within a year, what are some of the good steps for them to take before even reaching out for their own personal finances?
Well, credit is key, right? So if you have some, a lot of us, again, I'll go back, 8-10 years ago, you didn't know what your credit was until someone ran it, right? Now, pretty much every bank offers some kind of credit service to get your credit score. People know what their credit score is these days. So if you know you have a ding, maybe a collection account from some medical prepay, or maybe you missed a rental payment, or maybe you missed some kind of payment that would show up in your credit report, I would suggest trying to clean that up, because the higher your credit score, the better interest rate you're going to get in most cases. The lower the credit score, the more interest you're going to pay, which no one likes to do.
Right.
Self-employed borrower has got to be self-employed for at least 2 years, show a 2-year history.
Okay.
So,
that's good. That too.
if you went from, I often find cases somebody went from Wall Street and then opened up their own hedge fund, right? So they got a lot of money. They used to make salary and bonus, big time cash, but now they're not making money, or they don't have a history showing they're making money. They have money tied up in their fund or whatever. So it's interesting that the way people think also is, I should be fine. Like no one thinks about, I need 2 years self-employment when buying a place, even though they have all the money, and it's so from a mortgage perspective, self-employed borrowers need to have 2 years self-employment history. That's pretty big.
And it's based on their net income.
It's based on their adjusted gross income, correct, after write-offs. There could be other things that come into play that you can add back. There's a whole way we qualify via self-employed income, but they have to have a 2-year history of us to see that's not just a 1-year fluke, or it's
That's some sort of this consistency and making money.
Don't have another thing people do wrong is their bank statements, they have transfers and deposits all over the place. So large deposits are a big thing we review as a bank. Like, we see a $35,000 deposit into your account. Where'd this come from? We're a bank, we're a financial institution. We can't just assume like, it's nothing. It came from a friend. Okay, so we can't use it because we can't source it.
Right.
So make sure your statements are kind of, you're not moving money. And, my associate Lisa will always, complain when someone, we have a borrower who is transferring money from like one account to another and doing that. Like they have 3 different accounts. It almost seems like for no reason, like just moving money, and we have to connect all these dots of like transfer. Yeah, just calm down. Like keep things simple. Don't make any big purchases. Don't open new credit card accounts. If you know you're buying, keep it simple, KIS, I guess.
What happens if you just switch the job? You had a regular job, you're getting well paid, and then you just switched it. So it's my first 2 weeks on the job.
But a W-2, like salary. So I just need to see if they don't have a pay stub. Usually get the first pay stub in a couple of weeks, but if they don't have one, then sometimes the employment contract will stay with their earnings. So we could use that as long because we know it's going to be paid out W-2 salary.
Like on our side, for example, if you just switch the jobs and you're applying for a co-op, that might affect things because they usually think last in, first out, if anything happens.
Right. Could be. Well, co-ops are fickle. It's different from. I deal with guidelines, right? So my bank publishes guidelines that we have to adhere to. You have to fit into this box. And there are cases, that we go outside of the box if we have, a lot of post-closing liquidity, or we have compensating factors that create a good position for us. But with the co-op board, it's people, and there's no box, right? Sometimes they'll give you some kind of like thresholds. Maybe this is 25% max debt to income ratio, or they'll give you some thresholds. But at the end of the day, these are people making a decision whether they like you or not.
It almost feels that way, and we just hope it's just to the numbers,
we hope they like them.
Yeah, we hope they like them too. I mean, we prep all our clients to how to do the interviews and stuff like that, and majority of the time it's always like it went well.
Right.
Like, I mean, people are people at the end of the day.
Yeah.
Unless you're completely rude and everything, then
Right.
I guess you're giving them reason to reject you.
Yeah.
From the process.
For the most part, it's been reasonable, like 99%.
Exactly. Yeah. Most of the time.
I mean, the hardest part is they don't give you an answer.
Right.
There's no reason. They don't give you a reason. I shouldn't say
Right.
an answer. They never give you a reason.
Right.
It's why? Don't worry. No. It's kind
And
of like
there's a
shutdown.
buffer because you're dealing with the management company, and the management company is their buffer.
Yeah.
So they they didn't give me a reason.
It's shut down.
And trying to get them over the phone is a little difficult.
Yeah.
Which I think is another thing. Like, the importance of working with an experienced agent is we try to figure out what the board is looking for from the
Right.
beginning.
So you don't waste your time.
Yep, exactly, because it's a lengthy process and it sucks to get turned out.
Right.
Turned out.
So one of the things that I wanted to mention was the closing costs.
Yes.
I get this question a lot from a
Sure.
lot of people. What are my closing costs going to be?
Sure.
And it's like there's different calculators that we use, or you put this, you put that, or whatever, and we kind of have like a rough idea of what it's going to be. But when it comes to getting a mortgage, I've noticed that there's two different things when you're buying it with a condo and when you're doing it with a co-op.
Correct.
We're talking about like a huge jump
Yep.
in closing costs.
Correct.
What is that jump?
So, first of all, I'll just preface before I get into the difference between condo and co-op.
Right.
I'll preface this with: you apply now. You put an application in our system.
Yeah.
You're going to be able to view what's called an LE, a loan estimate. Okay, and that loan estimate is going to be pretty. It's the maximum possible cost you can incur, so it's going to be pretty accurate. It usually comes in less. The title costs end up being less, and there's some things that are less, but buyers today get a loan estimate up front, so they know what they're going to pay once they even do a pre-approval, right? They'll be able to access that. But on the initial conversation, so again, co-op and condo. Co-op is not real property. You're buying shares in a cooperative, whereas condo is real property. Therefore, you are the biggest thing that's happening is you are getting title insurance on a condo, and you are getting what's called a UCC lien search on a co-op. Title insurance is a big insurance business in this country. They have it for commercial and residential. It's a monster animal. They're making a lot of money. God bless them. Everyone deserves to make money. But you're insuring the title to the property that no one ever can come lay claim to the property, to the deed of the property. There are searches involved. There are recording fees with the county clerks. I mean, this is like everyone's, it's almost like everyone's taking a piece with title insurance. And there's so many like little fees there. So that's a big cost. Mansion tax. So that's co-op or condo. That's $1 million or more purchase. You pay 1% of the purchase price in mansion tax. So you buy a $2 million property, that's $20,000 in mansion tax right off the bat. Mortgage tax. On a condo, you pay mortgage tax. On a co-op, you do not pay mortgage tax. Mortgage tax is 1.925% of the mortgage amount.
Ouch.
Boom. So
It's a lot.
yeah,
That's a lot of money.
it's a tremendous amount of money.
Yeah.
So on $1 million mortgage, that's $19,000.
Yeah.
So that's a big number.
Mm-hmm.
Co-op UCC lien search costs about $450-$500. So that's your cost there. And then you've got the same is bank fees, whatever those may be, to process and underwrite the loan, an appraisal fee, and a bank attorney in New York. So you're putting those three fees and a credit report fee, usually $15-$20, but you're putting those couple of fees with just the UCC lien search in a co-op, or maybe mansion tax. But with a condo, you've got title insurance, you've got mortgage tax, you've got a mansion tax. So you could have, in a big purchase, $70,000-$100,000 in closing costs, on a condo. So it's a big difference and a big savings when you're buying a co-op.
Oh yeah, it's a huge savings. We're actually going through. We're working with a buyer right now, and we're talking about a difference of either, especially with the new development, because new development is, and there's other closing fees on closing
Yes,
costs. on that.
Sponsor fees.
The sponsor transfer taxes.
Yeah, you're paying the seller's transfer tax.
and the seller's attorney.
Yes.
It's insane.
Yes.
So like on top of it all, we're talking about around 7,000 to 8,000 in closing costs for a co-op, and for a brand new development condo, you're looking around 29,000.
Right.
We're talking about $20,000 difference
Yeah.
by doing a condo and a co-op. So I mean, and it's surprising because when we tell people this, they're like, wow, like
Right.
why? It's because, well, first of all, new development,
Right.
but then I think the biggest one is the mortgage tax.
Right.
And I think the rate is different after you pass, I think $500,000, I believe, right?
Yes.
I
Correct.
think it's even higher.
Yes.
I think.
Yes.
So
It is. It is.
so they it's a huge difference when you're taking out a mortgage, and I want our listeners to know that about that difference, because I think there's a lot of confusion. They think, well, co-op, condo, whatever. I mean, if I buy it at this price, it should be similar to these closing costs, but that's not the case at all.
I mean, I would think. Do most people, most of your buyers prefer a condo, right? People always seem to say, I prefer a condo, but co-ops are better priced. Do I have that right?
So yeah, I mean, they want condo because they want freedom, right? They want freedom, but
They
then
don't want
with freedom, there's a premium, right?
And not just that, about 70 to 80% of the market in Manhattan are co-ops.
Mhm.
So if you're looking at condos, you're looking at a very small portion of the market.
Right.
So if you want to open up your doors, if you want to live somewhere, let's say back in the day, very prestigious, and even still right now, like Central Park West,
Right.
how can you find a condo there? It's
Right.
tough.
Upper East Side.
Yep. Upper East Side, very few condos.
Very few
Downtown,
condos,
different
sure.
story.
What is it? I think it's like 15% of the market or 20%.
20% of the market is condos, and
Right.
the rest is usually
80 are
co-ops.
just co-ops, yeah. Which in a way, I mean, for the buyers that are out there looking, pros and cons, right? With a co-op, you have to go through a board and everything. You're gonna save money in your closing costs, a ton
Right.
of money.
And also, even though co-ops don't have square footage, but if we were to measure it, if we were to take identical condo and identical co-op, then co-op would be cheaper per square foot.
Right.
So you're getting more for your money usually.
Yeah.
Yeah. So, Ami, I think we're done with the questions here. I think we covered all for what our buyers are normally looking at. You have another question?
I have one more question, the very important question.
What's the important question?
So if somebody has more questions and they want to get pre-approved, how do they reach you?
Right. So you can. That's a good question. I don't know who's listening. I don't know. I'm sure you're all great people. If someone wants to get pre-approved, first of all, they should call the NYC Apartment Zone team and go look for property, because these guys are great and they're hungry and they want to get you a great deal and they want to get you closed and happy in your new place. So give it up to these guys. My email is ami.rosen@wellsfargo.com. That's probably a great place to start. You can look me up. My name is Ami Rosen, AMIROSEN on LinkedIn or on Instagram.
Is that it right there?
That's it. AR_Mr.
Let's see if you
Magnetic.
can see it. I see it in the video.
And,
right here. There it is.
Again, that's AR_Mr. Magnetic. And if I have 2 seconds to tell my Mr. Magnetic story.
Sure, go ahead. Go ahead.
So, this came from, I was working with a business coach, and I was, this was, I don't know, maybe 7-8 years ago, and I was wanting to step up my game, to bigger rooms, bigger people, bigger places, and and she asked me at the time, she's like, what do you want to happen when you walk in the room? I was like, you just want to walk into a room and people know that you're there and you're the guy and you're like, you're almost like a magnet, be like Mr. Magnetic, She's like, well, create your superhero so that when you walk into somewhere and that you could change, that's your superhero, right? So if you're maybe having nerves or you're, unsure about who you're going to meet or you don't know what's going to happen, just turn on Mr. Magnetic, and then you can be so AR, my initials.
That's actually quite clever. I like
Mr.
that.
Magnetic. So when I can muster up the superhero powers, I just go in. I'm Mr. Magnetic, and that's
you
it.
feel invincible.
Yeah, exactly. So,
I love it.
So after you became Mr. Magnetic, that's when you became top 1%.
That's all it took.
It was during that time.
Hey,
But that's
that's great.
I had my best years. But like I said, for all you people out there, whatever you do, whatever business you're in, enjoy the good times, and then just don't forget what it takes to, there are ups and downs, as you know,
Absolutely.
and what it takes to keep yourself at the top is always, and it's never to stop, always do the basics.
Right.
Don't lose sight of the basics, because the basics will continually bring in the business. So
Right.
stick to the basics, I would say.
I appreciate that. Ami Rosen, I really do recommend everyone to follow him on Instagram, to be honest with you. He gets some great content. He talks about some motivational stuff too and everything. He'd be there in his, your jacuzzi or something? Just
That's my favorite. It's really cool.
He's just chilling here. He's showing his family and everything. So it's some great stuff.
Thank you.
Thank you so much for passing by.
No
we always
problem.
love to see you.
This is great. Thank
And
you.
then to the next one. Make sure you follow us on our website, all our social media, Facebook, and subscribe. And if you have any questions, you could always reach out to us at zone@nycazone.com. Cool. Take care, everyone.
Thank you, guys.
Bye-bye.
Bye.
NYC Apartment Zone, NYCApartmentZone.com.